Hang on one second, guys. We're having sound issues.
What do you want me to do?
I'm gonna see if I can. Yeah, it's working.
It's working now?
Hey.
All right. And we are live. All right. So if there was ever a question on if we do this live or not, that should
Answer it.
yeah, that should answer your questions about that, right? So appreciate everybody hanging on while we worked out some technical difficulties. So welcome to the UMortgage home ownership discovery class. I am joined with Darren Fan, loan officer here at UMortgage. We are super excited today to present some great information. Before we get started here, I want to give a quick intro to Darren. Darren and I started off as friends and roommates, and now business partners, and working hand in hand day to day for several years now. So it's one of those kind of like for me, dream jobs, because you get to work with your friends. So I want to introduce Darren. Does an amazing job with his clients. Really works hard, not only professionally but also at home with his family. 2 young kids. He's a great dad and great loan officer. So without further ado, Darren Fan.
Hey guys, Darren Fan. I'm originally from Saigon, Vietnam. Came over here when I was 3. From Dayton, Ohio, and met Chad in college here at UC, and we've been friends since. And I've been in your shoes. I've been in the position where I wasn't in the mortgage business. Like Chad was, and knew the ins and outs. I was, as a business owner, and I came to Chad, many a times, and he hey, what should I do for my first house? Hey, what are your thoughts? He consulted me through the entire process, made sure to listen to my needs. And I came back to him and said, Chad, family on the way. I need a new house. What do I do? So being in this business since 2017, so that's about 6 years, almost going on 7. I've been in the positions of our clients, the people listening to our webinar, our home owner seminar. So you and I have had the perspective of being homeowners and what it's like, and why our compassion is for what we do, and our passion for what we do. That's kind of a little bit about me, and kind of why I'm here today with UMortgage.
I forgot that part of our relationship of you buying your first couple of houses.
Yeah.
I was like, when you started talking about that, I was like, where are you going with this? Because I don't know, it was a long time ago.
A long time ago.
So,
yeah.
All right. So again, thank you everybody for jumping on. So we have pre-approved buyers on the call. We have some of our real estate agents on the call. So we want to make sure that we're covering all bases. And just so you know, we're going to cover what's going on with the market nationwide. We're going to condense that into what's going on in this market, specifically here in Cincinnati. And then we're going to go into what are the steps to getting pre-approved. And then we are going to end with what our tactics are, what Darren's tactics are for getting the buyer offer accepted. That's a key piece, so stick around for that piece at the end. So first, let's start with what's going on with the market. And actually, we're gonna hop right into the the local market and then go nationwide. So this is fresh off the presses, and take a step back. The MLS was down for approximately 3 weeks due to a ransom hack, and it has been restored. So when the MLS is down, it affects your Redfins, your Zillows, and everything else that kind of feed into that. And it was, not gonna lie, it was a little scary there for a minute.
Luckily for us, a lot of you guys are working with some amazing agents that, referred you to this webinar here that was able to think outside the box, was able to fight for their sellers and the buyers and go old fashioned, right? Picking up the phones and calling, hey, is that house still on the market? But it makes it hard, right? When you're not seeing the houses getting listed, when it is, if you're not sure if they're still active or they were pending. It was crazy times.
Yeah. So here's kind of the most recent statistics and what you want to see here. This is for 58 counties. So this is your surrounding counties and going pretty far out. This is, you'll see here, so last year's median home price locally was $250,000. We're currently up close to 10%, up to $285,000. So everybody's kind of seen that. I would say statistically, no one projected the 9.6 increase going into this year, that's for sure. And
average is what, Chad, about 3 to 4% yearly?
Yeah, so historically 3% is a really good, really good number to use for that. And the only time that we've ever lost was 2008-9, and we made up for it considerably. Obviously 2020 and 2021 with COVID kind of kicked off a perfect storm of good interest rates, people wanting to move, and the need to move and the ability to move. So it really has kind of like started what we're now seeing with lack of inventory driving home prices up. To that point, we actually have a video that we're going to try to show here. This is something that Darren and I kind of ran across when we were doing our research for this, and it is very relative to what we're talking about, and gives some really good insight from some of the more nationwide experts on the subject matter. So when we get a chance, we're going to go ahead and play that for you. Okay, so for all of you Shark Tank fans out there, you recognize Barbara, and this is something that we've been talking about internally. We've been talking about with our clients one-on-one, and it's so if you're not in this day-to-day, it's something that's kind of like a hard concept to understand, that buying a house right now is the smartest thing to do, okay? And if you're in the market, in the next 3 years to buy right now, you're going to put yourself in a position that is so much better than if you wait, right?
Oh,
That
absolutely.
cost of waiting right now is going to be immense. And usually we talk about the cost of waiting because, an interest rate could go up.
Yeah.
We're talking about the cost of waiting when interest rates go down. So this is a extremely hot topic that I actually met with, some market leaders in a different market last night, and we were talking about the exact same thing. What happens, when interest rates come down from 7.5 and it gets into that 5.5 range? It is going to be, a completely different, more competitive market. So something to keep an eye on. I believe it was Rocket projects that interest rates will be below 5% by the end of next year. Now, if they're half right, we're going to have kind of a feeding frenzy on our hands very soon. So something to keep in mind. But here, as you look at the local market, we're already here. Okay, so that median days on market, that represents the amount of days that a house is actually for sale on the MLS, on the open market, before going into contract. Okay, and when you take into consideration, usually house goes on the market, there's like 24 hours worth of like showings, 24 hours worth of offers, 24 hours worth of the seller reviewing those, and then 24 hours before you actually, actually go on the site and say, hey, this is now. So like that 4 days is probably closer to like 24 hours in reality, right? So just something to take into consideration, considering, and we have a graph that shows where that days on market is. So, when I'm sharing these items here, these statistics, there's a reason for it. It's not just like, oh, look at these numbers. It's what direction is the market going, okay? So when you see things like home prices going up, okay, there is a mechanism that drives that to happen, okay? And what that is that there is a lack of inventory. So we have more buyers than we have sellers, supply and demand. We have more buyers trying to buy less available items, right? Any type of economy, that's what's going to raise that price. Whether you're talking about pencils or houses, if you have more buyers than you have sellers, it's going to raise that price. We have seen that consistently, and we don't have any indicators that say it's going to slow down. So what we see is, as far as like the current environment of house prices raising, how we get loans done, meaning, you have to get pre-approved ahead of time.
Oh, yeah.
You have to be ready to go as soon as the house goes on the market, available and ready to go. Like this environment that we're in is here to stay. All of the indicators are saying that. So mortgage interest rates, you see the forecast, again, there's a lot of different opinion of what's going to happen with interest rates. The kind of the everybody's sentiment is we're probably at the peak right now with where the feds are talking as far as the Fed rate, and with every other different indicator that we look at. We're probably at the peak right now. Not to say it's going to be, less next week or the next month or 6 months from now, but it's probably not going to be higher, right? Which isn't, again, that's not necessarily a bad thing. An interest rate is not a forever thing, right? We have buy downs, we have temporary buy downs, we have long-term buy downs, we have refinance options that don't cost money. So there's lots of different ways that, you can obtain a house now and not have to pay, big bucks long-term, and you can make it more reasonable. But your real savings is going to be in what is that house going to do for you long-term, and that's the investment of home ownership. The statistic is, home owners are 44 times more wealthy than renters, right? So that's the idea of what we're doing. So the next slide that we want to show is another indicator of what's going on here locally with Cincinnati, and that is, it is in the top 5 nationwide as far as the best places to live for young professionals. So I know we have some young professionals on the call right now. There's lots of different reasons for this. It is a exciting thing for Cincinnati, an exciting thing for people that own property here in Cincinnati. And again, this is another indicator of what happens what drives the price as well. And you're seeing this as well. I know that you've been talking about, with your clients, having that young professional more and more these days.
Yeah, absolutely. I see a younger group of individuals that kind of see the writing on the wall. Like, I don't want to wait until I'm 30 years old to buy a house. I might not be able to afford it then, right? Especially in our market where, there are homes, yeah, we think it's expensive. It's, $200,000, $300,000. Go to some of the bigger markets.
Yeah.
Try to live in.
Or try renting.
Exactly.
Right.
My sister, her pain point, hey, been living in my house. She's in California. Been living in my house for, 7 years, and they haven't moved the rent, but they bumped it last year, and they're going to tell us they're going to bump it again.
Yeah.
I have to start looking. So, she's looking to buy a house.
Sure.
My brother in Denver, house the same size as mine is 4 times the cost of my house. And so it's they're experiencing it, and they understand the pain point of waiting.
Right.
And so this is why you see all these young professionals like, okay, where you and I, we growing up, we might have rented a couple of years more than what the younger generation is looking to try to do.
Well, I think the word's out on the investment of real estate.
Yes.
Right. And how costly renting is. Renting didn't used to be so expensive, and now it has become a real business.
When you start seeing Wall Street enter into the world of buying real estate,
right.
The true value of ownership of real estate.
So here's more information on the median sales price here locally in Cincinnati, and then the other kind of slide I really want to show here is the median days on market, and this is a 3-year clip. So what I want to kind of point out to everyone is this 2021, 2022, that market, while we were in it, it was like that. That's when we were already doing extreme, offers, meaning like gap appraisal and calling the listing agent and all the things that we kind of adapted to in this market. We were having 30 people at open houses and things like that. And look at the days on market. The days on market really never got below like 30 or even what was that, 40 days. You see kind of the averages up there, but now you see this severe decrease in days on market for a median, and that is like, that's eye-opening, because like the market has been very similar to this, and a lot of other markets are kind of coming out of the craziness, and we're getting more intense.
Yeah, I think there was even though there were so many buyers and the market was, in our industry, everybody's at their capacity, there was just still more inventory than what they are now.
Right.
Right. And that's, that's a great thing. If you're a seller, you have all these people still wanting and buying your house, and as a buyer, it just kind of reinforces the need to buy a house now.
Right.
Right. Things aren't going to change, drastically.
Right. So, all right. Next, we're going to kind of jump into, I'm going to skip over to, what does make up a seller's market versus a buyer's market. On one of the previous slides, we showed how many houses were new listings, this month, and then how many actually sold. Okay. So if that number is 1 for 1, or 1,000 new listings and 1,000 sales or close to that, that's 1 month worth of inventory. Basically, whatever goes on the market sells, and that's where we're at right now. If you have double that, you have 2 months worth of inventory. So 2 months worth of, 2,000 new listings, 1,000 sales. That's 2 months worth of inventory. So, but again, right now we are at 1 month worth of inventory. For us to get into a neutral market or even get to a point of it being a buyer's market. So if you hear someone say, "Hey, I'm going to wait until we're more in a buyer's market. I don't want to buy when we're in a seller's market. I want to be in a position of it, to negotiate. I want to be in the advantage there. I want it to be a buyer's market." The answer to that is we need 7 times more inventory than what we have now, 7 to 8 times more inventory than what we have now. So we're far away from that. For that to happen, we would need, like something out of the norm as far as economy goes. So again, that's a key indicator to see how many houses are for sale, how many sales, buyer's market, seller's market, what direction will your home prices go? I'm driving this point in because I want everyone to understand buying now, great investment, okay? Your house that you're buying is going to appreciate some big jumps over the next 3 years buying here in Cincinnati. It's going to be a great investment. Now, interest rates. Got 2 slides on interest rates, and this is kind of the biggest one is interest rates follow inflation, okay? So, there's the Fed rate, there's, the stock market, there's the bond market, the 10-year treasury, follow inflation. So when the CPI numbers come out, follow that, okay? This blue line represents what is inflation year over year. This goes all the way back to the 70s, okay? And then the green line represents what the average interest rate is taken for Americans in that year. And look at the correlation between inflation and interest rates, okay? So keep this in mind, okay? And know that the direction that inflation is going right now, interest rates are still going up, so the rates will change course and come back down. No one disagrees with that. No one is like in debate of that. It's a matter of when, not if.
Yeah.
Right. Okay. So and then here's a couple projections as far as.
So this is our value proposition. This is why your agents referred you, or somebody that cared about you referred you to us. We can do it all. Being a broker, we came from the realtor world. Being a broker, we get to shop your qualifications to 20, 30, 40 banks out there to see which ones fit your needs the best. And this is why we go through the upfront process, right? We go through the pre-approval consultation. We look through all the documentations. We really want to zone in on everything that you qualify for, so that we can give you the best options on what is best for you and your family. We use a local AMC to help negotiate with our clients beforehand to make the best educated offers. Hey, we ran the comps, we don't think that the house will appraise at this point, so let's make our offer at this point. So we're always in communication. At UMortgage, we're able to close quicker than most banks. To set your application apart, we call the listing agent. And currently, one of the things I'm a big advocate of right now is I have, in the last 2 or 3 weeks, I've won probably 5 offers. A good friend of mine, my sister, taking full advantage of what's going on in the market, being able to negotiate seller credit for a 2-1 buy down. So, using seller credit to not have as much money coming to the closing table, depending on, the client's needs. But, I was able to save, 3 families being able to do a 2-1 buy down. It's a temporary buy down in rate. So the seller pays for it. And the great thing about this, instead of a permanent buy down where, you spend, a couple $1,000s and you lower the interest rate and you have a smaller a monthly payment, when you refinance or you sell your house or whatever, that's gone. You just fronted that money. With a temporary buy down, that money is actually held for you. So whenever you decide to refinance or you sell your house, that money is yours, and it goes to paying down your balance. But the true difference is, in this market, that we're able to negotiate to make sure that the seller and the buyer wins. We know that the house can go. It's a $400,000 house. Maybe we come in at 405 and we ask for $10,000 of seller credit. Well, getting a 2-1 buy down allows our client to save about $520 a month. for that first 12 payments, and another $260 a month for payments 13 to 24. By then, the market's probably going to shift, and we're going to refinance them and get them that, so they know exactly what that looks like, for the future.
Right.
So.
Yeah, and so, a lot of what you're talking about is the financial plan of a buyer. Everybody's financial plan is different. Everybody's situation is different.
Yep.
What they're able to do is different. So whether you're, meeting with a financial advisor about long-term investments, or you're talking with us, it's kind of the same concept where we're taking everybody's individual situation, their wants, their needs, and what they have available, and then we're putting a custom plan together. So the first step in that, though, is you have to have the meeting. You
Yes.
have to get pre-approved, which is a process of reviewing your credit, your income, and your assets. Okay, so that's really the three pillars of being pre-approved. And everybody, just so everybody's clear on this call, you must be pre-approved to really even go through houses right now.
Yeah.
Most listing agents won't allow a buyer through unless they actually have pre-approval in hand. And like you said, having a pre-approval with a local lender, not your internet lender, is going to make a big difference as well. But maybe walk through what your process is with clients when you're going through their credit, income, and assets here.
So, we always try to do like a Teams call or a in-person pre-approval. Some people can't, and we'll just do it over the phone. But, we want to make sure that, the application is complete. We go through the application, make sure, are they married? How many kids? Oh, you pay child support, don't pay child
Right.
support. Just go make sure it's complete.
Right.
And once we do everything's complete and, go with the income, we go through their credit. And, whether it's an 800 credit score or 450 credit score, it's all treated the same. We want to make sure that there's nothing on that credit report that shouldn't be on there. Oh, I wasn't aware of that. Oh, no, that's incorrect. Okay, well, then you can kind of change it and use it. The great thing working in our company is we do a soft pull. So, we don't do a hard inquiry on you. That's needed when a time of, getting ready to submit an offer. We want to really make sure we run through the AOS and do a hard pull. But we do a soft pull on the credits. It doesn't affect the credit score, so you don't have to worry about that. But when we go through the credit, we want to make sure, like, hey, is there anything that we can do? I know you're an 800 or a 720 credit score, but you could be a 760. I see a couple of cards that maybe have high utilization, or that the hey, you have a couple of newer accounts, it's going to be close to the year mark or the 2-year mark. You're going to see an increase on your credit score. So there's different things that we do to kind of try to give value and get everybody on the same page as far as when we look at credit. And then, as far as income, that's the hardest part, right? Like, we want to make sure that, yeah, we see that you make this paycheck and that you're getting this, but can we use all of your income? Like, hey, Darren, I was in this field, just started this field, been here about 10 months. I get paid this an hour, but I work a ton of OT.
Right.
Can't use your OT because we don't know if it's, if there's a strong pattern. If there's not a strong pattern, we have to have a 2-year history.
Right.
So
we have to make sure they can afford it, because that repayment's a big deal.
yes.
And underwriting guidelines are stringent.
Mm-hmm.
And then maybe follow up with that with how much cash do they have?
Yes.
What is their not cash, but what is their reserve
Right.
requirements for the loan?
Yeah, and it just varies depending on your qualifications, right? Your liabilities, your debt to income ratio, how much you're putting down.
Right.
So there's different requirements to how much assets are needed. Just because we can maybe get them a great grant program or a down payment assistance program as a first-time home buyer, if they fit the qualifications of a certain program, you still need to have certain assets of your own that you have the ability to bring, right? And so on an FHA loan, you're still kind of required, even if you don't bring any money to the closing table, you're required to have at least a down payment somewhere.
Right.
So we have to show it in your 401k or somewhere else sitting in an account. So those are the little things that we have these conversations with, and we make sure that we plan it all out and make sure that everybody's on the same page, so that when an offer is submitted, that we are committing to their dreams of when they find that perfect house.
Yes.
That something later on down the road doesn't come up.
Right. So that's the key. When they're making the offer, right, they're ready.
Ready.
The buyer's ready. You, the buyer, are ready. You understand what your credit qualifications are, what you can afford as far as the income goes. You understand how much money out of pocket you're going to be responsible for, and you know your options. Okay, so when you're buying a house and you're getting financing, you're not purchasing a house based off of a purchase price, right? You're purchasing it off of how much is the monthly payment.
Yeah.
So that's where the education piece comes in, and we're making sure, hey, this price range in this neighborhood costs this much to you,
Yeah.
which is different than you and you. It costs you this much,
Yes.
right? So that's the key. And then, so that's just like the basics of, Loan Officer 101. What we're also doing is when we get to the point of actually making an offer. And that is when, that's when we really shine. Okay?
Yeah, because
this is what we focus on.
Right, because we don't want you to be, in this market that is so fast, we don't want you to make a rash decision.
Right.
Right. We want to make sure that you're comfortable with the decision that you make, because we've done our job by disclosing to you, hey, this is what that monthly payment looks like, and this is what your cash at close looks like.
Right.
When you walk through that house, if everything lines up and you already know your numbers and you're comfortable with it, then you can make a good financial decision for you and your family.
Right.
And make an offer at what you're going to be comfortable with.
Right.
But how do you do that if you don't know the numbers?
Right. So making the offer, right? How do we make that offer stand out? To kind of paint a picture for everybody on the call, okay? We always visualize the seller in their house, dining room table, and they've got all of their offers laid out in front of them. Because most cases, it's a multiple offer situation. So what are we doing that are getting our offers accepted at a higher percentage than the other banks out there, but not by offering more? I mean, you literally tell a story at least once a week about, we got the offer, it wasn't the highest price, and then it comes down to a tactic or a something that is not monetary that you're giving the seller. So an example of that would be, hey seller, we can close in 12 days, right? Mm-hmm. Where everybody else is offering a 30-day close, right? So the seller gets their money sooner. Take that, and then maybe you add on top of that, hey seller, we can close in 12 days, but you don't have to move out of the house for 72 days. How's that sound, right? Now, that may not work for every buyer. It may not be interesting to every seller, but if you offer it to the seller and they don't want it, it's still something you're offering them. It's a negotiation. Other things that you always have to consider in this market is the appraisal contingency. That's the biggest, that inspections is the big one that sellers are always like, hey, what about, they're concerned about that because it's a something that could come up, right?
And for us to be able to explain the options that you qualify for and some of the taxes ahead of time, that's where what we do when we're talking to the listing agent, we're getting that information out of them.
Yeah.
What's important to your seller right now? What do they need? We're able to do that, right? So this is how we can negotiate on your behalf, and and kind of really form that great partnership with the realtor to make sure that we are one in how we are structuring your offer to stand out and win over another person's offer, right? Just because that other person may have a escalation cost, like, goes 30,000 over, it doesn't mean anything if they're not facilitating what the seller really needs.
That's right. That's right. So this is what we do. This is our process from understanding the market to understanding the loans and the buyer and educating the buyer, to formulating a plan that is unique for each of our clients, to make sure that we're making that offer to the seller, and understanding, you make a really good point, understanding what the seller's needs are as well, and bringing those two together. Those are the things that we're doing to create what I consider wow customers, really just raving fans at this point.
I mean, check us all on Google.
Yeah, absolutely.
You'll see our testimonies from previous clients.
Yeah, and you said it perfectly. Everybody that's on this call right now, was referred here by someone that we work with, right? Whether it's a previous customer that we've worked with, whether it's a real estate agent that we work with on a regular basis, someone cared enough about you to refer you onto this call. So in conclusion of the class, we are asking for you, if you got value out of the class, please refer a friend, a family member, maybe somebody that's renting right now. Help us get to them to be able to help educate them, educate them on, hey, now is the time to buy.
It is the time to buy.
Don't listen to your uncle or your buddy who isn't in the market. Understand now is the opportunity to get in. It is going to be a harder barrier to enter when rates come down. So with that,
don't forget to scan the QR code and then fill out that little quick survey. We want to make sure that we thank you by giving you $300 off your closing costs.
Yep. Yes. And again, for attending, $300 off your closing cost. So it has been an absolute blast doing this with you today, and look forward to the next one. But great information today. Keep serving your clients the same way that you have been, and keep working really hard. So I want to thank everybody for attending. Enjoy the rest of your day and have a great Labor Day weekend.
Bye.